Welcome to Charts Today. My name's David Linton, and today's edition for Friday, the 20th of March, comes to you from London. And thank God it's Friday. What can I say? We've had one hell of a week with everything that's been going on in the Middle East, and we're seeing, crude oil prices. We have got this massive upside target potentially on crude oil. The 60-minute chart. Interestingly, we hit the same level that we hit as a resistance level back on the 6th of March. We hit that same level yesterday. What is a little bit worrying is this is like an ascending triangle pattern. If we break 120 and hold 120, the height of the triangle, you just do the maths on that, that points to a lot higher. So we're calmer today, looking at the shorter term charts, and I put out my morning call analysis to our energy clients. So we're neutral on most things for today, but it's all eyes on what happens in the Middle East. And of course, we come back on Monday morning, having digested the news flow on the weekend. European gas prices rocketed. Just in the UK, we saw prices leap from 130 to 175 pence per therm yesterday. So this is definitely going to have inflationary effects. And there are lots of other products that are rising on the back of this war in the Middle East. If we look at coal, and we're seeing big upside targets in lots of areas. There's coal. We talked about urea. That has really got big implications. This is fertilizer, and even if we look at some of the other products, like we just look at things like uranium, that is again potentially breaking to new highs. So we will see a lot of fuel switching going on with just trying to find the cheapest way to generate electricity, but it's going to be really, really challenging for inflationary effects, especially in the UK. And if we look, at some of the other markets like UK power, that was up 7% yesterday. We've gone from a power price in the UK of 70 to 120. We did fall back to 1.7 yesterday. I work with a lot of power utilities, especially in the UK, and the reality is we are seeing higher prices, and the decisions that a lot of private investors will have that pricing cap. But that's going to be really interesting, seeing how that's going to change the price cap on energy. But we are seeing this is just going to have, and it will filter through to lots of things. So, the inflationary effect that we will see is undoubtable. I mean, we saw the Bank of England yesterday hold on rates. No big surprises there. If we look at the bond markets, which is the thing that I do look at a lot, many of you will know that. We look at the bond market. That's really got quite scary. On the daily chart, we are heading to territory now where we'll break to bond yields not seen since the financial crisis, back in 2008, and you can go right the way back, and you can see that's where we're going to, the sort of that same crisis level that we saw back in those times. So really not great news. The UK government raising, having to raise money with bonds, and we're seeing that in other markets. The Aussie bond, that really is moving. I mean, that's actually, now inflation is embedded in the Australian market, and that's really having an effect. And the sort of the elephant in the room, or the black swan, if you like, is Japanese bond yields. And we were worrying when we were seeing these making new highs in January. Well, we've got an upside target back to that sort of 2.3% level. And that is looking worrying. And on the weekly chart, we've got some very, very big targets. So, we do need to, there's lots to worry about. Looking at, then just the effect on some of the soft commodities as well. I mean, I analyze these reports for clients. I'm doing this, every Monday morning now. If we look at things like coffee, a lot of things all sort of turning a corner. Cocoa, chocolate. We had that huge rise in cocoa, then a big fall off, but we're starting to see new targets kicking in. Sugar. I worked with a sugar trading firm in Australia last in December. Looking at that move, we are now above the cloud on the lagging line significantly for the first time. Is that now turning a corner? That's really going to be quite interesting. So, and that's on the daily chart. And then we go to the 60-minute chart. We can see we've got quite a big upside target for the first time in sugar. So, really quite interesting there as well. And I'll be analysing these products, but we're seeing things like wheat. That has gone higher, hitting targets. Corn, similarly, now breaking with upside targets, and you can go all the way through. Rice is a really big, requirement in Asia, and we're now seeing the higher low, potentially the higher high. So we are going to see global inflation. It's going to be really quite significant, and that goes right the way through to lots of different products. So that's remembering the cycles. Bond markets tend to fall first, then stock markets. Meanwhile, commodity markets are booming, and last of all to boom is precious metals, which we'll have a look at because the key thing is what's going on in the gold price. So first of all, we've seen bond markets, the yields are rising, the bonds are falling. We did see on the S&P, in fact, we've crossed below the 200-day moving average. I can just simply put a 200-day moving average on, and you can see we're just crossing below. As Paul Tudor Jones, the famous Wall Street investor, once said, nothing good happens below the 200-day moving average. We'd already crossed below in the cloud. We've got a downside target on the NASDAQ, which will only be deactivated if we make a new high. So, there's a lot to watch. And the UK market also pulling back, looking at the 60-minute chart. If we move lower, we activate quite a big downside target. So these are the things that you do need to be watching. The DAX in Germany up this morning, but again, really just breaking below that cloud, has been running sideways much more than the UK. So really quite key there as well. And the Asian markets, well, Japan was closed last night, but we saw we've got a downside target activated. Will we move below the cloud? You can bet your bottom yen they're watching this chart, the Ichimoku chart in Japan. Australia was down a further 0.8%. Real fears there for inflation, of course. Gold did fall back yesterday, and if we look at the chart, quite interesting that we've got a spike low. We didn't actually close at a lower level. There were buyers at 4,500. But really, we've got this downside target, which has been met, by the way. So, the picture for gold is a little bit worrying, but we have seen this 4,500 level, buyers kicking back in, and we are up today. Silver, that run was huge news at the start of the year. That's unwinding with downside targets, but again, we're not making new lows. Keep an eye on the short term. You can see we've got an upside target there for silver. And so that's going to be quite key. Looking at stocks, we saw some pretty big moves. Tesla down 3%. Multiple downside targets, move below the cloud on the daily. Look at that. 3 targets all pointing to that area. Remember, multiple targets increases the likelihood of those targets being met. Nvidia needs to hold $170, but still the high was back in October. And Meta, we're seeing lots of downside targets on the daily charts. Do watch those. Do try and stay in stocks that are in uptrends with upside targets. Until Monday, have a great weekend. Happy charting. Bye for now.